start looking at my trading, looking at charts and technical analysis, as you know, we have a PowerPoint to go through which explains the various things, such as this disclaimer. This webinar is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information, whether this is suitable for you on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and then contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk, and it may not be suitable for all investors and traders. Please therefore seek the advice of an independent financial advisor for more information on that. This webinar is not advice, and the webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimers, the disclaimer mentioned here, and Admiral Markets, provided by Admiral Markets. And I thank you for your attention on these two topics. Sorry about that. It seems like I have to adjust the PowerPoint afterwards. Seems like it got out of whack. Don't know why. Didn't change it myself. So sometimes technology can be funny, but it's a bit bigger than usual. Anyhow, we're going to take a look at intraday strategy and intra-week strategy. Does anyone have a particular preference? Do you rather look at short-term and then long-term, or do you want to go per pair, one by one? We'll be looking at various strategies potentially. We could do a mix and analyze the entire pair using moving averages, candlesticks, and Fibonacci, or go strategy by strategy. So I'll see if there's any preference out there. If you do, let me know. If you're here, if you're new in here by any chance, or if you're visiting the second or third time, for instance, please let me know in the chat so that I have a bit more idea who is seeing this for the relatively first time or second time or so. Then I can give a bit more background along the way. All right. Otherwise, most people have maybe been here multiple times, if not regularly. We've been having this webinar since June 2013, so this is already going on a year and 3 months in the meantime. So hopefully some of you sticked around from the very beginning, and of course they know what's going on a bit more than if you're joining the first time. So if you're new, let me know. We have German IFO Business Climate Index. In hour 13, we have dollar new home sales. Those are the two red tagged events. Then we have some yellow and greener ones as well. No preference, so okay, then I get to choose, and I say this time let's go just use all the strategies in one and take it pair by pair. And let's start with the Eurodollar. Eurodollar is not really my favorite pair at the moment, unfortunately. Not to burst your bubble, but I don't like the formation. I already showed you yesterday that it is looking on hourly at least too much like, or 4 hour maybe even, too much like a falling wedge. Right in here, a resistance line. Right in here, a support line. No sound. That is strange. Does anyone else hear me? Does anyone else hear me here? Do you hear me? Ha, that's so strange. All right, folks, do you hear me now by any chance? Do you hear me? Do you hear me? Testing 1, 2, 3. Do you hear me? Testing 1, 2, 3. Good morning, everyone. Hope that you can hear me now. There was a bit of a sound problem, and or I don't know, the webinar didn't even start somehow. So I left the thing, and hope it's working now. Let me see the chat. Oh, good. Bob says it's working. Morten Vigantas says okay, good. Great. Don't know why the first time start broadcast didn't work, but this time around it did. So I guess you didn't hear anything what I said from the very beginning. So thanks for joining today, Wednesday. We're going to take a look at strategy, 24th of September today. Just two disclaimers saying that this material is intended for a global audience. This webinar, please, one second. Yeah, there it is. Please take into account that the information in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading foreign exchange and global financial markets is considered high risk and may not be suitable for all traders and investors. Please therefore seek the advice of an independent financial advisor. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here. And as always, we thank you for your attention on both slides and both disclaimers. Alrighty, so we can move on after the disclaimers and go to explain the calendar here. We have German IFO in hour and new home sales. Those are the red tagged events with various medium and light tagged events coming up. And with that said, let's take a look at the currency pairs. Now again, sorry for that delay. We look at strategy, intraday and intra-week on Wednesdays. And basically, we could be looking at the market in various ways. We can look at each pair and do all strategies on each pair and go pair by pair, or we can say we choose one strategy and then move on from there and go from pair to pair and only look at that strategy and then start all over again and look per pair at the second strategy. So that's up to you, which one you prefer. If I don't hear anything, I'll just choose myself. In the meantime, I would like to ask you, if you are new in here by any chance, please let me know. Or if you're watching relatively second, third time, relatively new, let me know, because we've been having these webinars since June 2013, which is a year and 3 months, 4 months. So that's been a while. So hope maybe some of you have been already there since the very beginning. I hope so. So if you're new in here, then you can see that there is a certain rhythm that sometimes I don't even explain certain things. So if you're new, it would be good to know. Alrighty, so let's start. Bob made the decision for us, so let's start with the Eurodollar, and let's just look at it pair by pair. Let's see, this is still that falling wedge in play. As I said yesterday, I don't like the Eurodollar because of that. It it is looking like reversal signals, but I'm not really that fantastically enthusiastic about reversal trading. So that's the point. But it does look like a falling wedge. There are 4 hits on the bottom, 4 hits on the top line. Specifically, there's the last 3 hits on the bottom line where price really broke the bottom only by 10 pips twice in a row. Really shows weakness to me. So not looking like there's steam left to the downside. We had this bigger zigzag correction which brought it up to 129, about an 85 pip rise yesterday. It's counter trend, but it does make sense if you look at the falling wedge structure. But then respected this top line as well. And now we're hanging around 128.40, 128.50, which in a way, if you look at it, maybe even hourly is probably even a better chart to look at it. It starts to resemble the typical, it's maybe not a perfect one, but it does start to look like an inverted head and shoulder potential. We have approximately the same level here as here. Time-wise, it's not really totally equal, but sometimes it happens. Wait. 62 candles versus it's only 38. So time-wise, obviously, there's more here than here. Unless we count this entire thing as the head, then it would become a bit more equal. I know it's a bit of a detail, but 40. You see, then they become more equal. Then it's actually equal. If we count this as one head, then it's more symmetric. Well, anyhow, this could be a bouncing spot in my opinion. And if it doesn't bounce here and breaks to the downside, I'm not too interested considering that space that we have here below. So, you know, this support line here, and we probably have a resistance line right in here. It's kind of like the Asian consolidation here, where price bounces up and down between a tight range of about probably 20 pips from top to bottom. So let's see which direction price bounces out. Does it break, below the Asian range or above it? In this regard, I even like the upside a bit more, although it's a reversal side because of the fact that we have all these chart patterns going on. The downside break, wouldn't expect too much. Maybe a retest of this, for instance, this bigger bottom. Darshan is pointing out to double bottom of 50-minute chart, and we do have a bullish pin bar right here at this level, and we're staying in this Asian range indeed. So let's see. We're now about halfway. So obviously now I'm not all too enthusiastic about trading right smack in the middle. It is a pin bar, but still it is also a pin bar that closes halfway this tight range. So I would rather wait. We also have indeed news at 9 o'clock that will always bring its momentum, or will bring its, how do you say it, its volatility is the word. With regard to the news, of course, we can see some spikes up and down. So that's something that's an hour from now. Let's take a look and put the moving averages on now. And then it looks like this on the 4-hour chart, and you can see why it's such a big downtrend, because price is remaining below the 89 EMA ever since this moment, the 15th of July. So yes, big downtrend. So for a bigger reversal to happen, we're probably going to need to break above the 89 EMA, as we can see, because anytime price hits the 89 EMA, we still continue with the trend. So preferably a higher high above the 89 EMA. So it looks like we could maybe go up to the 89 EMA, right? If we put a fib, let me zoom in here. Let me put a fib on this first correction here, right? This is, I'm fibbing the correction. I'm putting a fib from bottom to top, and we are bouncing off the 78.6 fib, and the minus 618 could be the target, which is 129.50 and equal to the 89 EMA and equal to this resistance zone right in here. So something like that, could that happen? Yes. So that's maybe a potential for today, a reversal up to 129.50. What will happen there? No idea. It will depend if this is just one of the retracements still for more downside, or it's a decision point though, or will we break out for a bigger reversal? Time will tell, not sure. Looking at the divergence in play, there is maybe potential for that, but it's only a single divergence, so it's a tough one. Daily chart is showing that maybe more upside retracement is possible because this is rounding up, but only upside retracement for further downside eventually. But it could go to the daily 89 EMA, which is now around 132.50. So something like this, up to 129.50, then down again, and then up to 131, and then maybe down when this daily is back to the zero line, is something that seems likely to me, if you see what I mean. So what is today? Today could be the first green upside here, right? Let's zoom into that motion. Up, down, right? I'm just making it bigger. Today could be this part. Tomorrow could be maybe, and Thursday could be this downside, and maybe Friday part of this upside, Monday again upside, you know, etc. So if we zoom into that blue circle part and go back to the hourly, that first green part consists of potentially like this, right? 3 parts within that one green part. Will that happen? Time will tell. We can keep an eye on the bottom of the range here. We can even zoom into the 50-minute chart. Got a bottom here, and price is relatively close to the L3. Didn't touch it quite yet. Missed it by 5 pips. That's just a bit on the higher side. So I would still be cautious. Price, even if it breaks these bottoms, because we're running into an L3. If it will be just a bit closer, I would consider the L3 already hit. Now it's a toss-up. But obviously below L3 we could have that small breakout down to L4. What probably would be more interesting, I think, is the potential above H3 here. Let's take a look. From hourly perspective, ooh, the daily pivot point right there. Okay, but weekly pivot point is 128.90. That could be a stalling spot. Here we see the daily chart, and if price goes back to 129.50, all it really did was bring price back to the 21 band. You see that? So it's not really major, nothing major. If it goes up there, it would still be below this resistance level as well, this fractal. But yeah, obviously you see a lot of momentum to the downside. It's just that if you look at the space between 89 and 21, it's gigantic. But it's showing some struggle. So anyhow, this is analysis. Talking about strategy, if one is using moving averages, what we want to see on the daily is price hit the 21 band and then close below it, for instance. That still has some time to do. The 4-hour chart, we already had it, in fact, here. And even another time here, but this is something, obviously, that's getting riskier because we already had a recent breakout below the 21 EMA here and here. This is the third one. If you have that many in a row, it's getting riskier. Plus, we have divergence. So I would probably move the stop loss either above this one and be out, or above this one. If I'm just looking from a strategy point of view, I didn't take the Eurodollar on this break or this break. But I did trade it on the hourly recently here, or was it the 30? It was the 30-minute actually, here and in here. Well, anyhow, that's a different story. These are good breakout candles here below the 21 band. This one didn't do all too well. depending on how you trade management. If you use fractals, then it would have been just a small loss because the entry would have been on this candle. Anytime price goes back and then closes below it, right? Like here. This one, maybe as well. That would have been maybe, depending where you have the stop loss. This one, but that would have been trail stopped. And now another one here. But with double divergence between the 1 hour bottoms, that's when you want to be careful with breakouts below the 21 band. That's why I don't like the entire Eurodollar situation for trend continuations, and moving averages are more for trend continuations. So in that regard, I wouldn't be surprised if this gap, the space right in here, the space between 21 and 89 on a 4-hour chart like this, or the space that is currently between price candles and the 21 on the daily is filled. That's what can happen. You see here between the gap between 89 and 21 is minimal. Look at the gap here. Look at the gap here. These are all signs, I think, of struggle at least. Whether the retracement happens indeed this always remains a question. So let's skip the Eurodollar. I think doesn't look too interesting. Let's take a look at the pound. The pound dollar is funny in my opinion because of the fact that, well, we certainly have a serious medium uptrend. Long term, if you look at the daily, the trend is down. Why? Because we have, if you look at the fractals, you can quickly see we have lower lows and lower highs, and this is still a lower high. But we also have a higher low. So I would still consider this as a downtrend on the daily, but we do have this going on. We do have a pause at looking at recent price action. So downtrend on daily, uptrend on 4-hour, because here we have higher highs and higher lows, right? But we have a resistance line coming in, and hourly we have actually pretty strong momentum, and this is looking like a correction up. So we have a bit of a mixed picture here. We got daily down, 4-hour up, hourly momentum down, plus the bear flag. Let's see. Bob is saying, don't you think the recent down move is a result of profit taking following the referendum? Yeah, that's definitely possible. That's definitely possible. I didn't really think about it, but I can imagine so. How that influences this chart, I don't know, to be honest. It might be indeed so that because of that, one can consider this more like a retracement. That's true. That makes sense indeed. From a technical point of view, though, it still looks an impulse, and it's kind of like a mountain here, isn't it? And the middle part of that mountain, often referred to as an armpit, is here at 164.80. That would be a resistance level to be careful of. So that, yeah, one could consider that maybe a retracement. Let's see. From this point of view, it still looks like a bear flag, followed by an impulse. So I would be interested in this because it would be matching nicely. So a break to the downside is something that I find interesting. It would also be a break of 1 second. Let me put this line on. Of what could be a correction on the daily chart. So yes, uptrend on a 4-hour chart, but if the uptrend collapses on the 4-hour, then it looks like a good continuation of the downtrend on the daily. These support levels we want to be aware of. These fractals, these daily fractals, obviously. So once we crack this, then we have some space to fall. And then not only the daily downtrend will continue, but also the downward momentum here, and the bear flag would break. So we got 1 hour and daily supporting each other. Only the 4-hour is kind of being stubborn at the moment. So we have to see, maybe the 4-hour will win. Maybe the 4-hour is still stubborn. That price will continue like this, shoot up, hit this, start making a bull flag, and start breaking to the upside. And we will break the daily resistance. It's possible. So I'm keeping an eye on this trend line, on this trend line, on this resistance. If we break and this bear flag, so there's maybe some small space here, not a ton, before we hit resistances. So there's not much space between those two resistances, as you can see. After that, if we do make the break and we start making a bull flag, then the next break could be maybe interesting. And let's see, downside break. Primarily, I think these support levels are still important, but we could have already some downside above that. But 163 and lower seems to be a bit more interesting. So now let's take a look at the moving averages. Oh, you could put a fib, by the way, as well on this downside, and we stopped at the 50 fib. So let's see if that is the turning spot indeed. So now let's take a look at the moving averages. And we see the prices above them on the hourly. So we would need probably to break. We would like to, for the moving average strategy to kick in, I would need price to start to make an impulse. These moving averages, the 21 band to turn red and turn down, and then see a break of the next fractal. So something like this probably. Boom, 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 with moving averages downwards. We have a weekly pivot point as well to deal with here, just above the 163 level. 4-hour, the moving averages are mix, and the daily, we're still having the same situation with that big Friday reversal bar that's in the 21 band, but price still hanging in the 21 band as we speak. So yeah, that's the question. Big reversal bar. So that a break of that low, for instance, would seem interesting to me as a confirmation. But even now, potential trade with I think with the stop loss above this high, because it's trading the 50 fib-ish roughly with the stop loss above this high. I think makes the most sense, because if the price goes above this level, it doesn't look bearish anymore. So if this could be just, this upside could be a retracement of that big Friday bearish candle. Wouldn't be too bad of a setup. I mean, if you use the moving averages, I'm still looking for a clear downside and a break of a fractal 4-hour daily. I'm looking for the next daily close. If you look at the daily chart, next daily close below the 21 band. So a daily close, if you use the 21 band on the daily chart, which probably not many do, but daily close below this bottom of the 21 band, which is 163.40. 15-minute chart, last but not least, stuck between, as we would expect, between H3 and L3. So obviously those are the typical zones that we want to see price break. This case, I'm not too fond of the H3 break to the upside because of the long-term analysis, and I'm more fond of the L3 break, for instance, at 163.60, and we can see the target down to L4 and L5 for an intraday short. That seems more interesting to me. From this point of view, it's maybe double top / ascending wedge break to the downside. Who knows? Looks like it, but we never know, of course. Looks like that's potential. But in any case, the price is still above L3 and it's still kind of range bound in the Asian part of the day. But let's see. We have red moving averages. We have bearish moving averages at the moment. What I'm looking for in the 50-minute chart regarding the moving average strategy is a downside, small correction, get a fractal, let these moving averages continue, cross over to 89, and then the next fractal break would be something that seems interesting to me. Hope that makes sense. Let's take a look at the euro. Darshan is saying we're getting a bounce up indeed. Let's see. Indeed we are. Let's see. There's somehow it looks different. 30-minute chart. We were looking at the 30. 30-minute had a pin bar. and we're breaking out of that range and approaching the H3. So it looks like indeed we're getting the bounce off of that. For instance, I had an inverse head and shoulders that we were talking about, and I would like to see H3, a stop at H3 or maybe just above it, or even now, how close is it? It's 3 pips away. So anywhere in here or just a bit above would be great. If it stops, makes a small pause, and then continues. If you were brave enough to take it in here, then you are already up in pips, but I didn't want to do that. Let's see. But interesting though, let's keep an eye on it. Let's see, that's the euro moving up, pound hanging around nowhere. Dollar yen actually did fall from the point here. We were looking at it yesterday saying, I'm going to skip this breakout because of the long-term analysis, but actually price didn't bounce off the 38.2 fib with the 50 fib. So anyone who took that short still managed to actually get a decent trade because it went down further than I expected. The strategy did meet the requirements of the moving average strategy because we had 89 here, 21 band down, and we were breaking through the L3 at that time, and it did work out for about 40 pips, 50 fib indeed being the bouncing spot, and we went up after that for a decent rally again off of that 50 fib. So one of the things that you can use, by the way, is time factor. If you don't want to take profit or enter immediately at the 50 fib, one way of doing that, by the way, is counting how many bars this bottom doesn't break. Remember that rule, time factor, when we had 1, 2, 3, 4, 5, 6, 7, 8 bars not breaking this bottom. So at that point, it's a decent probability that price is not able to break through that bottom, and we'll use this bottom as a bouncing spot. So, and that, as you can see, happened. It's not an ironclad guarantee, but just to give you some point of reference how you can look at it. And that was a pretty good, well, yeah, one of the best moments indeed one could enter a bounce trade back off the 50 fib here. In the meantime, though, price is having some struggle with that upside, and it looks like it wasn't able to break this resistance line. So it looks actually that bullish bounce yesterday looks now more bearish because at the current rate it's getting more of a weakness here. So it is, although there is no significant divergence, it looks like more on the hourly like we are in a downtrend channel at the moment. This could remain choppy like this. It could also break the downtrend channel and start to accelerate more to the downside, maybe, for instance, back to support around here. Let's face it, we did make a lot of upside gains, and 110 was very close by here. 110 psychological resistance, so we could be maybe doing something like this before we make an upside. With yesterday's respect here, it's starting to look like that. And well, obviously, if we break above the top line, things change. Then would not be opposed to any breakout to the upside either. But more of a neutral mode at the moment, open to both sides, both directions here in this case. So let's take a look at the 15, and we're seeing actually a breakout right now to the downside. Either actually a breakout right in here when we had a fractal at the L3, for instance, and the moving averages were bearishly aligned. Look, we had crossover right here. Good angle on the 21 EMA. It's not only about the crossover, it's about the angle and the break of the fractal right here. If someone didn't take that trade, then it's still possible to put a pending order around 105, 108.60, I guess. Stop loss could be relatively tight. Could be a 108.71, for instance. I know it's tight. Of course, that is something that everyone has to decide themselves. If I look at this, this is something that I'm thinking of because of the fact that we have already a double top here, and price clearly retested the moving averages already. Therefore, I would consider that a decent level, although it's tight. But tight is not always bad necessarily. It just depends on circumstances. Of course, we never know 100%, but this case, it doesn't seem like a bad one. Well, you know, so anyhow. Target would be L5 at 108.09. From an hourly perspective, this is not ready yet for the downside, but could still be okay if you look at it from this point of view. We got a trend line here. We probably need to break through the bottom though, at least. 108.45, 108.40, still some support here from a hourly perspective. So not a bit tricky to trade it on the hourly. I would wait probably from our perspective. 4-hour perspective, looking for a break indeed of 108.44, and there's maybe the potential to fill this gap right in here between the 89 and 21. Let's see if that happens though, because sometimes we don't fill the gap, but we bounce, like here, and here. So it said decision spot, bounce or break back to the 89, break back and fill the gap, or bounce and continue with the trend. Let's see. Anything else to mention? Yeah, regarding the target, that's what I wanted to say. If you're looking for a target, let's see. Yeah, the 61.8 indeed at 108.02 would be the next fib. That equals the L5 as well. Alrighty. Eurodollar target, let's see, it's causing some wick here indeed at H3, so let's keep an eye on it. Target, I think a conservative target would be indeed 129.20. I agree. A more aggressive target could be even 129.50. 129.20 is minus 272 target, daily R2 and this top, plus a monthly S2. And minus 618, some other pivot points, plus this resistance zone right in here. Alrighty, let's take a look at the Aussie. Does anyone else have a specific pair in mind, by the way, besides the majors that we've looked at and the Aussie that we're looking at right now? AUD-USD, when looking at a daily chart with a blank view in a breakout, a strong breakout to the downside after breaking this consolidation right in here, and price falling like a brick to the downside after that break. Very impulsive. Obviously, we have to be aware of this bottom, maybe even the armpit level here, something to be aware of at 87.60. Price is still pretty far from there from a weekly point of view. Bearish candles, big monthly bar coming in down. So if we break that support zone, we could see, of course, further extensions down to 80, for instance. If we put a fib on the very first correction here, we see price stopping at the minus 272 target here. The next target could be the minus 618. But definitely big downtrend here on the Aussie, AUD/USD dollar. So this breakout is getting some divergence here between the bottoms on the 4-hour chart. We can draw many trend lines on this downtrend channel. In fact, something like this could be a channel to keep an eye on. We have maybe a bit of, just like with the Eurodollar, a slight falling wedge. It's not very strong in my opinion, but slightly. Why is that? Because price, as it falls, it's starting to fall less far. You see? You see that visual? Let's take it from the top. Big. Still big, but smaller, still a bit smaller. Yet again a bit smaller, yet again a bit smaller. You see that pattern there? Every time it makes impulses to the downside, right? And these are the corrections. These are the corrections. These are the corrections, right? Does that exclude the fact that it could make yet again a downside, but even smaller? No, it could do that. But it is similar to the Eurodollar pattern of a bit, not as strong, but a bit. Double divergence on the hourly as well. We've had some good Aussie downside throughout the week, yesterday and Monday, but maybe that particular trend could be reversing in the next part of this week. Let's see. Price is right. Is at a talking spot. It's maybe at the top of this rising or falling wedge. Excuse me. So got single divergence on the 4-hour. So let's see. I don't consider this down momentum over. No, because it's too strong on the daily. But after a pop-up, then probably down. That wouldn't surprise me either. So yes, I'm still interested in downside, but not that much here. That's always that balance. How far can a impulse last before you get some correction? After which probably continuation is likely. Sometimes they last longer than we think. That's difficult sometimes, especially when price is making this. It could still continue, but there are serious signals that make it difficult to anticipate that. So from a 15-minute point of view, if we put on the Camarilla and moving averages, here the H4, despite the falling wedge, could still be a pretty good resistance spot. But, you know, the thing is that a trader needs to be very adaptable, because this could move down like this and then start, or I should use red actually, this could move down choppily and then start to aggressively move up, and use the H3 as a bouncing spot. And maybe we'll see some head and shoulders 2 here. So although the short isn't a bad idea off of this pin bar here, 50-minute pin bar, to remind you, it's a small time frame. Because the downtrend, there's still a downtrend, despite the reversal signals. Therefore, a rejection bar at the H4 tradable. I do think that it's more of an experienced trade, because it would be difficult for people who start out trading to recognize when to get out of that short. Because if price doesn't go as far to the downside and starts bouncing at support, then one want to get, you know, would like to get out of that trade, or move it to +1, or reduce the risk seriously, because then it's looking like the potential breakout out of this falling wedge, and we can see something like this happen maybe. So that's the question. We'll have to see how price responds to that support level at 86.70, at the H3, at the moving averages. The 21 band, in the meantime, yes, bullish, good angle, crossing the 89. So if it does bounce off the H3, it could be already a counter trend. It's a counter trend trade on the higher time frames, but it's already with the trend bounce to the upside on the 15. Target H5, for instance, or higher time frame looking for maybe the daily R2. The 89 EMA maybe, for instance. At 90.50. So I hope that makes sense. Well, what happens if this does crash, if this pin bar is the lead in a further downside, then I would be waiting for, well, probably would skip it, because before price gets down, before the moving averages are red and bearish, the target is too close by. What is the target for the downside? One second, let me calculate. Yeah, it could be, I don't expect much of a break. Maybe the L3 could be the target, right? Price could already bounce there. Why? Because we got the support line coming in. It's a falling wedge. It could bounce again off of the bottom. Although you never know, but falling wedges could even sometimes break to the downside, just like rising wedges can sometimes break to the upside. Doesn't happen statistically as much, but sometimes can happen. So the L3 would still always be a level maybe to think about, but it could be a bouncing spot as well, certainly. So it's not much space to the downside. It is indeed a good channel on the hourly chart. So therefore, a short in here is never a wrong idea, because we're at the top of that channel indeed. The only thing is, yeah, as I already said, it's something you want to be close. You want to have the finger on the pulse. You want to keep a close eye on it so that it doesn't turn around on you and surprise you and turn a pretty good entry just in a loss. Let's take a look. Let's put the channel on the chart that Bob was talking about. And that's, well, depends how you trade it, but there are different ways. There are a lot of ways here, but this is one of them. Or like this. But price is at this resistance line as well. The top of the channel could be a bit higher, but the resistance line that's connecting the most recent tops is closer. Something like that. So let's see. Another way of doing it, if one doesn't like 50-minute charts, is looking for the hourly shooting star, which is probably going to occur 22 minutes from now. But let's see. Alrighty, pound CAD. Let's take a look. Daily charts, blank charts, no tools or indicators except the fractal and AO for the moment. What do we got here on the daily chart? We got a pretty strong rebound in the pound. Pound making a sturdy rebound after it had been stuck in a huge consolidation here for pretty long. And I remember the false break it had here. I remember thinking about that it could be a false break before it was a false break. And luckily that cautiousness was justified because we got a pretty strong downside after that. I think we have to look at the weekly because it's difficult to interpret this. This could be a break, pullback, go. It could also be basically a correction that has finished and now we're back in uptrend. That's difficult to know here looking at this chart. Weekly, what a rise we had here after this 3-year consolidation. Boy, oh boy. That was some beautiful trading on the pound CAD to the upside. Really, really nice. And it did take a long, obviously this was a huge consolidation, but the break was really beautiful. And let's take a look at the AO. Strong AO, prices back to the zero line. But, you know, this is a weekly chart. This has a, it's difficult to tell because here we're in a big downtrend. This could be retracement again. Not an easy one. But if we put fibs on anyhow on this swing high, swing low, we didn't hit any fibs. All right. So I went halfway to 23.6 and 38.2. Not much of a value. Let's put a fib on this. Let's start fibbing all of these moves from top to bottom here. Hit the minus 618. So let's move that fib to the new swing high, swing low. Hit the fib here. Let's move it again. Shallow bounce off to 23.6. Hit the minus 618 here. We move it again. Shallow bounce again. We hit the fib here again. We move it. And what do we see here? We see price basically bouncing off the 78.6 fib. So for big bearishness, I guess we'll have to break this bottom of the fib. I mean, if you use the fib strategy, and we should have some space down to the second blue line, which is this top, these tops, and the bottom here as well. This is a bearish zone, looking at the fib strategy at least. Let's zoom into the daily now. Making higher highs and higher lows though at the moment, plus breaking out of this trend line. We can put a channel on the 4-hour chart that symbolizes the current uptrend at the moment, like that. I can use that channel for trading the upside. And now the hourly, we see a lot of choppiness. And a lot of spikes up and down. Price is pretty close to that top of the channel. We don't know if there's divergence, but there's a chance it will be. The hourly certainly does. Yeah, if anything, I don't see a lot of profit opportunity there, potential to the upside at the moment, looking at this configuration. But if price manages to maybe make a retracement, bounces back off the broken tops here, off the bottom of the channel, that could be maybe a trade up to resistance. So maybe a trade from here up to, for instance, somewhere in this zone. A trade off of yesterday's low around 180 up to maybe 183. Like that. After that, who knows? We'll have to see how price responds to this resistance level. Oh, Björn is asking if we can get the pound up to 85 again. 85. Yeah, 85. Yep, possible. 85. I had 83 in mind because it was a bit more conservative. But anywhere between 83 and 85 basically is that resistance zone, even up to even higher. But I took the bottom side of it. But 85 would be the more higher side of things, I think. 85, 85.20 there. So it's difficult to tell. It doesn't make much sense to look beyond that, how price will respond to this. I mean, simply we could say, okay, break out above it or bounce back down, but who knows? It doesn't really matter, I guess, for the moment. A bounce off this level for that 83, 85 target at around 80 would make sense. Now, stop loss, tight one would be even below this bottom. It would be very tight, though. A more spacious one would be below this bottom. Considering the pretty big target, the more spacious one probably makes more sense. And if then the channel gets broken, but the stop loss doesn't get taken out, then upon the retracement, it's time to exit the long for hopefully break even. So let's say, for instance, price makes its downfall. entry is made, price bounces, but doesn't get any steam, then breaks through the channel. That's the moment where you don't want to have, stop loss still safe below here. Price hopefully bounces then off of that support line, and that's the time I would exit, preferably around break even for the long, because then the dynamics have changed, the structure has changed, the channel has been broken to the downside, and this could be a hook back for more downside. So flashlight, warning lights, get out of the long immediately. Right? That's the advantage of having a spacious stop loss, because there is that chance actually to realize that the market conditions have changed and then try to get out of the wrong position at less of a loss or break even. Tighter stop loss, there is no second chance. That's it. End of story right away. Boom. Out of the trade. And that's often the balance between looser ones, you get a second chance, or most of the time, or tighter ones, you don't get a second chance, but you get a better R2R ratio if it does work out. So in that regard, yeah, that's how you can, if it does, yeah, that's how you can handle, how I would handle that. Let's see, let me take a look here. If a bounce indeed does occur at this level, roughly in the zone here, right, then keeping an eye on candlestick patterns, obviously, for some confirmation that there is a bounce is always good. We can put a fib, of course, as well. I forgot on this upside. Let's take a look. And the minus 618 target equals 183. If we put a fib on this side, let's see, it's a bit higher, then it's at 183.60. All right, so let's take a look at the moving averages. I hope that this isn't too long for you, but 4 hour is already an uptrend here. You can see pretty steep 21 band. 1 hour, 50-minute chart. What does the 50-minute chart say? Let's see, L4. Yeah, if it goes to L4, I think that could be a bouncing spot too, or anywhere above 80, basically. But it doesn't have to it doesn't have to go to 80 exactly, 180. It could indeed bounce off 180.50. Why? Because we got an armpit right here as well. Look, boom, boom, armpit right there. That could be support level. We have also some pivot points there. Plus we have L4. So I said 180, but if I think about it, if I look at this template, I would think that 180.50 could be a bouncing spot as well for that 183 target. Tighter stop loss would be indeed this bottom here at 179.73, 77. Looser stop loss would be all the way down at 178, 178-ish, which is a lot of it's a bigger stop loss. Obviously, that's more like 250 pips versus a target of 250. It's more like a swing trade, 250 versus 250 roughly. Although with an up potential of another 450 if it gets to 185. And with the tighter one, I would go for the 83 target, 183 for 250 pips target, versus a risk of let's see, 70, no, 80. So that's a 3-2-1. 3-1 R2R with the tighter one, 1-1 R2R with the looser one. With the looser one, though, there is an upside, depending on the momentum, target could be expanded to more of a 1.8 to 1. And the advantage that one could exit a trade if the price goes against oneself. So those are my ideas on the pound CAD. So a bit of a long answer maybe for your question, I'm not sure, but that was the pound CAD. I can see that we're getting close to the top of the hour, so I guess we've looked at some pairs now more intensively instead of looking a lot of pairs more quicker. So I don't know if you enjoyed that more or if you'd rather have the quicker version or something like that, but something different I thought, so I hope you found it valuable. We have tonight, we got more webinars, by the way. We have Nena talking about the most important factors in fundamental analysis. Tomorrow, price action at pivot points, the same time as today, and then in the evening, tomorrow evening, we have identifying swing highs and lows and zigzags. So tonight, tomorrow morning, and tomorrow night. So wish you a good day, wish you good trading, and hope to see you in one of these webinars again. Cheers.